The rich don't pay less in taxes because they cheat. They pay less because they understand the rules that are written down and available to everyone, including you. Today you'll learn the perfectly legal ways to keep more of your own money. To be crystal clear, this isn't about tax evasion, which is illegal. This is about tax avoidance, legally arranging your money to owe less. One can land you in prison, the other is exactly what smart, informed people do every single year. First, you've got to understand the two most powerful tools, and most people mix them up. They are deductions and credits. They both lower your tax, but they work very differently, and one is usually far more valuable than the other. A tax deduction reduces your taxable income, the amount of income you get taxed on. So if you earn $50,000 and take a $5,000 deduction, you're now taxed as if you earned $45,000. It shrinks the pie that gets taxed. A tax credit is even better. It reduces your actual tax bill dollar for dollar. A $1,000 credit cuts your tax owed by a full $1,000. Credits are gold. Always grab every credit you qualify for first. Remember it this way: a deduction is worth a fraction of its value, depending on your tax rate, while a credit is worth its full face value. If you can only chase one, chase the credits. They pack a much bigger punch. Now, everyone gets to take deductions one of two ways. The standard deduction is a flat amount the government lets you subtract, no questions asked. It's simple, and most people today take it because it's generously large. Or you can itemize, adding up specific individual deductions like mortgage interest, charitable donations, and certain taxes. You only itemize if your real deductions add up to more than the standard amount. Pick whichever one saves you more. It's your choice. Now, for the single most powerful legal tax strategy for regular people, tax-advantaged accounts. These are special accounts the government created to encourage saving, and they let your money dodge taxes in incredibly valuable ways. This is where real savings live. Take a traditional 401k or IRA. Money you put in is often deducted from your taxable income today, lowering this year's tax bill, and it grows tax-deferred for decades. You're saving for retirement and cutting your taxes at the same time. A Roth account flips it. You pay tax on the money now, but it grows and comes out completely tax-free in retirement. And a health savings account, the HSA, is the rare triple win: tax-deductible going in, tax-free growth, and tax-free for medical costs. Simply maxing out these accounts can save you thousands in taxes every year while building your wealth. This is the closest thing to a free lunch in finance. If you do only one thing from this video, use these accounts to their fullest. Now for credits you might be leaving on the table. There are valuable credits for things like having children, for education and tuition costs, for certain childcare expenses, and for lower to middle income earners. Each can be worth real money. Many people simply don't know these exist and never claim them, handing the government money they didn't owe. Good tax software or a professional will surface the ones you qualify for. Never assume a credit doesn't apply, always check. Beyond accounts and credits, a few smart moves help. If you invest, holding investments longer than a year qualifies you for lower long-term capital gains tax rates instead of higher short-term ones. Patience is literally rewarded with a lower tax bill. Charitable giving can be deductible if you itemize. And if you have a side hustle or are self-employed, you can deduct legitimate business expenses, lowering the income you get taxed on. Keep good records, and those everyday costs can reduce your taxes. Now a mindset shift: taxes are not just an April event. The smartest savings come from planning all year long, not scrambling at the last minute. Decisions you make in spring and summer shape the bill you get next year. Throughout the year, contribute to those tax-advantaged accounts, track deductible expenses, and think about timing. A little year-round attention beats a frantic April every time, and it's where the people who pay the least taxes quietly win. Should you do it yourself or hire help? For simple situations, good tax software is cheap and walks you through the credits and deductions you qualify for. It's more than enough for most straightforward returns. Don't overpay for simple taxes. But if your situation is complex, a business, lots of investments, rental property, or major life changes, a good tax professional often saves you far more than they cost. The right accountant is an investment, not an expense when your taxes get complicated. Now a myth worth busting: a giant tax refund is not free money or a win. It means you overpaid the government all year and gave them an interest-free loan. They're simply handing back your own money, late. You control this through your withholding, set on your W-4 form at work. Adjust it so you owe little and are owed little. Then keep that extra money in each paycheck and put it to work in your own investments all year. That said, if you struggle to save, a small refund can act as forced savings. It's not optimal, but know the trade-off. The goal is to be intentional, not to accidentally lend the government hundreds of dollars for free. Let me steer you clear of traps. Mistake 1. Not using tax-advantaged accounts. Skipping your 401k, IRA, or HSA is leaving huge, easy tax savings on the table every single year. This is the biggest miss for most people. Mistake 2. Missing credits and deductions you qualify for simply because you didn't know about them. That's money you overpaid for nothing. Use good software or a pro to catch everyone. Never assume you don't qualify. Mistake 3. Confusing legal tax avoidance with illegal tax evasion. Never hide income or fake deductions. That's fraud with serious consequences. Everything in this video is about using the rules as written. Play the game smart, but always play it straight. So lock it in. The wealthy pay less by legally using the rules. Credits cut your tax bill dollar for dollar and beat deductions, which only shrink your taxable income. Choose the standard or itemized deduction, whichever saves more. Max out tax-advantaged accounts like the 401k, IRA, and HSA. Claim every credit you qualify for, hold investments long-term, plan all year, and get professional help when your taxes get complex. That's how you legally keep more. The tax code is not just a bill. It's a giant book of incentives, rewarding the people who take the time to understand it. You don't need to be rich or sneaky, you just need to know the rules, and now you're starting to. If this made taxes a little less scary, tap like, follow the channel, and share it with someone who dreads tax season. What tax question should we break down next? Tell me down in the comments.